Hello everyone, myself Dipti Sohani from Tiaknagar Junior College, Dombivli East. In previous video, we have studied about revaluation account and steps required for solving the problem of admission of partner. In this video, we are started with the journal entries required for admission of partner. Journal entries are the base of accounts which you have already studied in 11th. So let's begin with the journal entries which are related to admission of partner. So first transaction, increasing the value of asset. The value of asset get increased. So in revaluation account you have studied in previous video, that is changes in the value of assets as well as liabilities are recorded to the revaluation account. So this logic should be kept in mind and we are preparing our journal entries. Increasing the value of asset, that means the value of asset get increased. As you have known, asset account are the real accounts as well as asset has a debit balance, and transaction says that there is an increase in the value of asset, that means debit balance should get increased. So here I am giving asset account debit to revaluation account. Whatever changes are done in the valuation of asset should be recorded to revaluation. So here asset account debit to revaluation account, or you can write profit and loss adjustment account, whatever is comfortable to you. Second is decreasing the value of liability. The liability will get decreased. It means the liability get reduced. Liability has a credit balance. Originally liability has a credit balance and I want to reduce that. So for that purpose I am giving exactly opposite, that is debit balance to the liability, and whatever effect is recorded to the revaluation. So journal entry is liability account debit to revaluation account. Third transaction is decreasing the value of asset. If the value of asset get reduced, in that situation originally asset has a debit balance, so I would like to reduce that balance. So exactly opposite balance is given to the asset account, and that is credit balance. So I am giving revaluation account debit to asset account. Fourth transaction, increasing the value of liability. Now here the value of liability will get increased. That means originally liability has a credit balance and you want to increase that. So for that purpose you have to give liability as a credit balance. So the journal entry is revaluation account debit to liability account. Now fifth transaction, recording unrecorded asset in books of accounts. Suppose assets are not recorded in the books. Unless and until you have not recorded, that asset should not shown in the books of accounts. So you have to record that unrecorded asset. You will come to know that this asset is not recorded in books of account. So record that. How you will record that? Because of unrecorded asset, the value of asset will get increased, and definitely asset should be recorded. That means asset should be come into the books of accounts. So asset should get a debit balance. So the journal entry is asset account debit to revaluation account. Now sixth transaction is creating or recording new liability in books of accounts. Now liability will get increased. Now new liability is entered in books of accounts. So here liability has a originally credit balance and now it is increased due to unrecorded liability. Now we are going to record it. That means liability will get increased. So obviously liability should get credit balance and debit balance is revaluation account. So journal entry is revaluation account debit to liability account. Seventh transaction is transfer of profit on revaluation to the old partner's capital. Now after transferring all the adjustments regarding revaluation of assets and liabilities, we are closing our revaluation account, and after closing we are getting either profit or a loss out of that revaluation account. So if there is a profit, then how you will transfer to partners capital account? So the journal entry is revaluation account debit to old partners capital account. As you have known, capital has a credit balance, and due to getting profit, capital value will get increased. So definitely here we have to give capital as a credit balance. So the transfer of profit on revaluation will get a journal entry like revaluation account debit to old partners capital account. And last journal entry is transfer of loss on revaluation to old partners capital. If there is a loss, due to loss, the value of capital will get reduced, it is deducted, and originally capital has a credit balance, so I would like to reduce that balance. So credit balance should be reduced by giving effect on debit side. So definitely here I am making an entry like old partners capital account debit to revaluation account. Why I am specifically written old partners? Because this revaluation effect is given only to the old partners. Profit or loss, whatever is done due to revaluation, is affected only old partners capital account. New partner is not entitled to get any benefit or any loss out of that revaluation. So always keep in mind that partners capital will get either profit or loss, but this is to be given only to the old partners, and new partner is not getting any benefit out of revaluation account. Thank you.